Welcome to the Deep Dive. Today, we're jumping straight into some pretty significant turbulence in the Korean financial world. We're looking at sources covering, well, a whole mix of things: regulatory shakeups, big leadership questions at major firms, and some really impactful changes hitting home buyers.
Yeah, it's definitely a complex picture right now. You're seeing this fundamental tension play out. On one hand, you have this push for, better governance, more consumer protection, necessary stuff. But on the other hand, that push is bumping right up against the need for immediate market stability. And some of the, let's say, strong language we've heard lately is having very real, very fast effects.
Okay, let's start there then, with that strong language. It seems like the FSS governor, Lee Chang-jin, his comments, especially during that parliamentary audit, really stirred things up.
They absolutely did. You have to remember the rules here. The FSS, the financial supervisors, they're the enforcers, right? The boots on the ground for policy execution. The FSC, the Financial Services Commission, they tend to set the broader policy direction. So when the head of the FSS speaks so bluntly, the market hears it as, okay, action is coming.
Right. And the big one was about the Saemol Gyungo offices, the community credit unions.
Exactly. He came out and basically suggested one-third might need to merge or consolidate. And he didn't just pull that number out of thin air. He cited data showing nearly half, 49.2%, I think it was, had non-performing loan ratios over 8% in the first half of the year. So there's a real issue there with loan health.
But it was the way he said it. The public call out for consolidation. Our sources mention history here too, like in 2011 when similar comments caused huge withdrawals.
That's the key context. Yeah, there's a history of sensitivity. People remember that 2.5 trillion won outflow.
Uh,
And what made it even messier this time was the jurisdictional confusion.
right, because the FSS doesn't actually oversee Saemol Gyungo directly.
Correct. That's the Ministry of the Interior and Safety, MOS. So the governor seemed to imply Mo was changing its tune on supervision, and then Moore had to come out and say, no, that's not quite right. That kind of disconnect between regulators, well, it just adds fuel to the fire of market uncertainty.
And that this regulatory directness didn't stop with the credit unions. It moved straight into the big financial groups and their CEO selection processes.
Yes, he really took aim there. He talked about special characteristics, particularly calling out BNK Financial Group, suggesting that CEOs kind of dig trenches by putting their allies on the board to secure their own reappointment later. And boom, BNK immediately put its CEO selection process on hold. That's direct impact.
He did seem to soften it a bit later, saying it was more like verbal guidance for now.
A little bit, yeah. But still with that warning, like, we'll act fast if we see problems. It puts companies in a tricky position. Even the Political Affairs Committee chairman kind of cautioned him, saying, civil servant actions get overinterpreted easily when they touch on private CEO choices. It's a delicate balance.
Then he went even further, targeting private equity funds. He actually named MBK Partners as a possible test case for being forced out.
Yeah, that was pretty aggressive, threatening a major global firm like that. From his view, it's about enforcing rules, consignment management guidelines, but the industry perspective naturally is quite different. They argue PEFs often bring needed restructuring, add value, and this kind of talk paints them in an unfairly negative light. They're worried about punitive action over proportionate regulation.
So it's this pattern, trying to improve governance, but the tough talk itself causes instability. There's a quote from Professor Kim Young-jin at Sogang University about this.
Right. Professor Kim basically argued that execution bodies like the FSS need refined statements to avoid misunderstanding. He suggested policy talk should really come from the FSC chair. It highlights a structural issue, doesn't it? Good intentions on governance, maybe, but the delivery method and the apparent lack of coordination can become destabilizing forces in themselves. Confidence is just so fragile.
Okay, so that's the external pressure from the regulator. Let's shift focus internally to a place where leadership seems much more settled. Woori Financial Group. Chairman Im Jong-yong looks set for reappointment. Or what grieves Ann?
Yeah, the narrative around Woori is quite different. The case for keeping Im Jong-rong seems really strong right now. He's delivered on some big strategic goals, getting that comprehensive financial group status, bringing in the investment banking license, folding in Pengyang Life and ABL Life. Those were major steps.
And the financial results seem to back that up.
Absolutely. Q3 profits look set to break their previous record, around 975 billion won. And with those life insurance acquisitions contributing, Pengyang Life alone usually adds something like 220 billion annually. Some analysts think they could even hit 1 trillion for the quarter.
Wow, okay. And the market's noticed, I assume. stock price.
Oh, yeah. The stock is up massively, over 127% since March 2023. Plus, he's aligned with the government's push for productive finance, committing 80 trillion won. His policy background is seen as a real asset in this environment.
But hang on, given the governor's focus on governance and that trench-digging comment, is any reappointment completely safe right now? Could there still be pushback?
That's the million-dollar question, isn't it? Performance is one thing, but the regulatory climate is another. His strong track record definitely helped shield him, and critically, Woori seems to have gotten its internal controls sorted out that was a past weakness. Plus, honestly, there isn't a really obvious, strong alternative candidate waiting in the wings. So while the rhetoric raises the stakes everywhere, his renewal looks very probable.
Okay, moving from leadership stability to just raw numbers. The Q3 earnings from other big players like Shinhan and Hana looked pretty impressive too, despite all the background noise.
It's definitely impressive. It shows the underlying strength of these big groups. Shinhan, for instance, is knocking on the door of the 5 trillion club for annual profit. Their Q3 numbers beat expectations.
What's driving that? Is it just higher interest rates?
Interest income is strong, of course, but what's really interesting is the growth in non-interest income. For Shinhan, that was up over 6%, with fees jumping more than 11%. It shows diversification. Shinhan Bank is still the main engine, sure, providing like 3/4 of the profit, but they're not just relying on lending margins. That's a sign of resilience.
And Hana Financial. Similar story. I know they had a tough comparison with last year because of an asset sale.
Right. That Gangnam office sale last year made the year-on-year quarterly number dip slightly, but even so, they beat expectations. And their cumulative profit for the year so far is actually a record high for them. If you take out that one-time sale effect from last year, the underlying performance is very strong.
What drove Hana's growth then?
Even more pronounced non-interest income growth there, a huge surge, 17.3%, mostly from trading securities, foreign exchange, derivatives. They had a great quarter there. And look at their shareholder return actions, 150 billion won buyback and cancellation. Plus, they're moving up their target for a 50% return ratio to next year. That's 4 years early. Shows a lot of confidence.
Okay, so the big banks seem pretty healthy, robust even. But let's look at the other side of the coin policy impact on individuals. This new real estate rule from October 15th sounds like it's putting a major squeeze on homebuyers.
It really is. This specifically hits people buying new apartments through public offerings in the regulated zones Seoul and those 12 areas in Gyeonggi. The key change is the LTV, the loan-to-value ratio, for the middle payment loan. It used to be, 60 or 70%. Now it's slashed down to just 40%.
Okay, walk us through what that actually means for someone trying to buy.
So think about how these are usually paid. Maybe 10% down, then 60% in installments, that's the middle payment, and the final 30%. Before, you could borrow most of that 60% chunk. Now, with the LTV at 40%, you, the buyer, suddenly have to come up with an extra 20 or 30% of the property price in cash just for that middle payment stage. It's a huge amount of money out of pocket that people weren't expecting. The loan guarantee limits didn't get adjusted to cover this gap.
And it doesn't get easier when it's time for the final payment either.
Nope. Those existing caps on the final residual loan, like 400 million or 600 million won, depending on the price, they still apply. So the credit is tight all the way through the process now.
And are we seeing people change their behavior because of this?
Oh, absolutely. The sources show a clear shift. People are looking outside the regulated areas now, places like Dimpo, Wasgong, Dongtan. Why? Because the LTV there is still 70%, up to 600 million won. Plus, often lower prices and much shorter resale restrictions, 3 years instead of 10. So the policy is basically pushing demand outwards.
And there are concerns this could actually hurt housing supply overall.
That's the worry, yeah. Construction companies count on getting that middle payment money flowing in from all the buyers to fund the actual building work, project financing. If you choke off that flow by making it harder for buyers to get those loans, the concern is it could slow down construction and actually make the housing shortage worse down the line. It seems a bit contradictory to the goal of stabilizing supply. So when you put it all together, you've got the market trying to figure out these really direct, sometimes jarring regulatory comments. At the same time, you see these big banks posting incredibly strong profits, showing real fundamental health. And then layered on top is this significant new financial burden on everyday people trying to buy homes. It just really underscores how policy decisions, even well-intentioned ones, can ripple through the whole economy in complex, sometimes unexpected ways.
It really does. So here's something to think about, maybe connecting back to that initial theme of governance. With the FSS governor so focused on accountability, How does the financial sector find that sweet spot? The balance between needing that external scrutiny, that supervision, but also maintaining the market confidence that stops things spiraling. And maybe, what are the real measures of a regulator's success? Is it just stopping bad actors? Is it just stock prices? Or is it fostering a market that feels genuinely healthy and stable for everyone involved? Something to mull over. Thanks for joining us for this deep dive. Hopefully this helps you cut through the noise and understand these key shifts happening in Korean finance.
Yeah, hope it was useful. We'll be back soon with more insights.
See you next time.